Short squeeze, a phrase you may have heard of in 2021, especially if you're involved in the stock market around stocks like AMC and GameStop. But what exactly is a short squeeze and how can you trade it? In this video, I give you a 3-step process to finding stocks to trade and invest in around the idea of the short squeeze, and we also look at some examples and get into some theory as well. Hello, I'm Stephen Ho, trader and founder of TheStopHunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. I'm going to keep it very simple around the idea of the short squeeze, but it's quite straightforward, and you could take GameStop as the recent example in 2021. Investors in GameStop thought it was a poor stock and sold short the stock quite heavily, and the price went down. Now, rumour had it that the company could return to profit, and there was some sharp buying, and the sharp buying intensified and became a lot stronger. And what happened then, as the price rose very rapidly, is the short sellers were forced out of their positions. They were squeezed out of their point of view that GameStop was a poor stock, and what we saw was the price went from the low single-digit dollars to the 3-digit dollars very quickly. So that is the basics behind the short squeeze. So the important takeaway here is that you understand first of all what short selling is, and I'm going to put a link in the end of this video for another video you can watch if you don't understand about short selling. But you've got to get that concept in your head. But generally that is what a short squeeze. There's not too much to it, and like I said, it can happen in stocks, and it also happens quite commonly in commodities as well. So you don't just have to focus on stocks, you can do the same thing in commodities. I'm going to put another risk warning out there that this strategy is very high risk and very high reward. If you get it right, you can make a lot of money. If you get it wrong, you can lose your shirt. It is very dangerous. Now, what you've got to think is why these stocks or commodities are being shorted, and that's because the point of view is that they are very poor, and a lot of the money behind those decisions are big hedge funds, investment banks, and normally they get things right. Occasionally get it wrong, and that's what we want to take advantage of, but you have to be aware they do that for a job and they believe in their point of view. So it is a very dangerous place to play in. Beware the sharks. So we are looking for stocks that have been heavily shorted that we believe can turn round and turn more bullish. Now, we've seen on Reddit and Wall Street Bets a lot of talk around those type of stocks, but we're going to look at a 3-stage process that you could use to finding them for yourself. Now, the first stage is that you need 2 bits of data on any stock: short interest and the short interest ratio. I'll explain those in a minute, but everything that you're going to see in this video is free information and readily available. So there are scanners for this sort of stuff, but they cost a lot of money, and you can actually get hold of this information very easily and do it yourself. So step 1 is finding the short interest and the short interest ratio. But first of all, let's understand what short interest is. Well, it's very simple. It's just the number of shares that have been sold short but have not yet been closed out, and it's normally given as a percentage number that you'll find on various platforms and websites. So where can you find this information for free? Well, I've got one typical example of many from a website called marketwatch.com. They've got a screener that looks for short interest, and as you can see on the screen here, that it gives you a nice list, it's updated daily, of all the stocks where the floated short percentage amount is greater than 20%. And that's a significant number that I'd look for to start my analysis from. So if you looked at stocks greater than 20% of a float that's short, then that's a good starting point. So that is our short interest. Now we need to ascertain the short interest ratio data. So what is the short interest ratio? Again, very simple formula. It's the number of shares short in a stock, and it's divided by the average daily trading volume. That's it. It gives you a simple number, and what that essentially means is it's how many days to cover the short interest to the volume averagely traded. And what sort of number is significant here? Well, we're looking for probably 5 and above for our stock that we're looking at to give us the potential to play out as a possible short squeeze play. So if we looked at our short interest list from marketwatch.com, we can see various stocks there, and I'm going to stop on Blink charging. It's one that I trade regularly, and for whatever reason you might be more of a fundamental trader and think, no, this stock is going up for whatever reason, and it's often an event that turns these short trades around into a more bullish point of view. It could be earnings, it could be a new product, it could be some economic change, basically a positive bit of news that will give it the spin to move round. Now, as we can see from Blink here, we've got a floated short of 33.68%. So that's quite significant. So that ticks our first list of greater than 20% floated short. So we're interested in that. So I would then flip to my charts. Now here we can see Blink charging. It's a daily chart. Nothing special on there. There's a MACD below. What you can see is these volume bars, and the black line in the volume there is a 50 period moving average. Okay, so this is where some strategies differ in this short squeeze approach. I like to take a more smoother volume because remember, the short interest ratio is those number of shares shorted divided by the average daily volume. Here I'm going to use a 50 period moving average. I go down to the number, I see that it's roughly, for argument's sake, 2.3 million. So we take that 2.3 million and we divide that into the number of shares, stocks that have been sold short. So back to marketwatch.com, we've now got our two variables that we need to calculate for the first two parts of our strategy process. We know that the short interest is greater than 20%. We looked at it and it says that it is 33.68%. We then go across from the 33.68%. We can actually see the short interest is 12.16 million, so nearly 12.2 if we rounded that up. We then divide that by our 2.3 million average trading volume, and we get a ratio of 5.26 to 1. So that then ticks our next box of being greater than 5 and one to potentially watch for a short squeeze bullish reversal contrarian play. So step 2 is we now need a reason for our contrarian viewpoint. Now it might be the fundamentals like we mentioned briefly before, an earnings event, new products, replacement of the CEO, some economic, political news, something that changes the fundamentals of the company. But what I also like to use is social media scanning and searching, and you could, for example, use Google Trends to search for stocks that are talked about or lot, there's a reason that people are talking about them, and that can give them the momentum to turn around. So you've got different variables, but you need to find a reason for the movement. And often nowadays with technology as it is, doing or finding social media scans, and a lot of those are free or available if you do a search on the internet, or like I say, go to Google Trends, find stock, type stocks in there, or short squeeze as a title, and see what stock interest comes back to you, and use that as your shortlist to see if it marries up to your actual short squeeze, short interest ratio list. And that really is part 2. We're looking for the reason, and now part 3 is like the absolute final part of the jigsaw, and that is the timing of the entry to the short squeeze bullish play. Step 3 is all about momentum and getting the right timing, and for every stock that goes up out of a short squeeze, there are as many that keep going south and get shorter still. So it's very important that you get the timing right, and also recognize when you're wrong and get out before you lose your shirt. Now for me, getting the right timing is using technical analysis. You might already have your own strategy that you could overlay steps 1 and 2, but I like to use my own setups, and we're looking at one at the moment, and that is a Req'd setup with various indicators. There's breakout boxes, there's stochastics and RSIs, a whole host of things. But what it's telling me at the moment, if we look on the chart on the left, that currently we're in a sell situation and it's just not the right time to buy yet. So step 3 is create a technical analysis setup that allows you to time your way into the trade that you're looking at. It's ticked step 1 and 2. We're now looking for 3 to be the final tick before we move on to actually pressing the fire trade button. The technical analysis doesn't have to be that complicated, because we're back at our first ordinary candlestick chart with just a simple MACD on there. Backtest the results that you get, see how they turn out before applying real money to the strategy. If you want to learn more about the technical analysis that I might use to trade the short squeeze, I'll put some info in the descriptions below, and also link a video at the end of this that you might find useful. So there you go, a simple 3-step process to finding possible trades, stocks, and remember commodities as well. We looked at the short interest, the short interest ratio, finding a reason for the stock to move in its reverse direction, and we looked at timing by using technical analysis. This was just a simple overview on the stock squeeze. You can make it as hard or as easy as you like, but this gives you a simple free approach into that trading strategy. So I hope you've enjoyed today's video. If you've got any comments around the short squeeze, or you've been successful in trading short squeeze stocks over the last year, let me know in the comments below. Let me know about any strategies you use to trade the short squeeze. If you want to learn more about what I do, all links in the description below. So if you liked today's video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons to get further notifications of content like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.